All right, taking a look at Bitcoin on the daily chart. Just a recap for anybody who's new, we're in this descending channel. The trend is your friend until it ends. So until we break out of this channel, the assumption is we're going to remain inside the channel. This is a downward sloping channel. That means that we're going to remain in a downtrend. But in this local area right here, we kind of have a consolidation that's not great. It's not the best, showing many characteristics of redistribution, which could carry us down to a move near the bottom of the channel, which would be kind of a, oops, we don't want that, which would be a frightening move for the crypto noobs and an incredibly amazing opportunity for those who do understand how this market moves. I would love to get a move down to 5,000. It doesn't have to happen, by the way. Nothing, you know, that's an extremely low level. More importantly is this level right here at around 13.7. $13,700 is an extremely important level when we look at Bitcoin on the macro picture. I'm just getting a little bit of downwards FOMO, thinking that I could get a $5,000 Bitcoin. I wish, not bloody likely. So let's take a look here at why that $13,000 level is so important, why it's such an intriguing level. I'm going to go to the 3-day chart, just because we're looking at a lot of information here. And we have a ton of resistance here. So, you know, back in 2017, the blow off top did result in a price that was $20,000, but the candle closed at a much lower level, and it encountered many points of resistance up here at around 13. So you've got this range between 13.8 and 11.5, we'll call it. And that's a very interesting range for me. Bitcoin has never really retraced this low before in previous market cycles, but this is a very different cycle from a fundamental point of view. The cryptocurrency market has only ever existed in the context of an equity bull run, and we have the fundamentals of an equity bull run changing, and I think we're actually entering, if we are not already inside of an equity bear market. It's too early to call it a technical bear market unless you're going by the 20% retracement rule. I like to follow structure. We need to get that macro lower high in. The unfortunate reality is once we confirm that macro lower high in equities, and we will take a look at the equities charts in just a moment, it's going to be a very large move down if we do confirm that. But be that as it may, you know, this cycle is different, so we need to look at things level by level. I'm not convinced of this local zone, but I will give this area the benefit of the doubt because it is holding on top of this all-time high, previous all-time high. So let's put another line right there at the previous all-time high, 2017 rally, also the area of the breakout. It is valid. It is valid. I'm actually going to go to the candle body closes. It might be a little bit more accurate. You can see how price is responding off of that level. So it's certainly a level that is very valid. My concern comes with the smaller timeframes of what this consolidation is showing us, how the structure of this consolidation is. And we'll take a look at that in just a moment. But if we take a look at this from a potential support area, if we look at this from the Wyckoff point of view, with 3 key events that signal the beginning of a bottom, you're looking for the seller's climax, the automatic rally, and the secondary test. So we can mark those down right here. This is just a potential. We have our seller's climax right here. We rallied off of that level to get our automatic rally right here. And then we've come down and test the area of the seller's climax. So far, so good. And if we continue to hold this level, we have just completed phase A of a Wyckoff accumulation. So that's a good thing. That's a positive. That's a very good step in the right direction. So there is the possibility that the bottom is in. Okay, I'm not gonna, I'm not going to say that there's no way that the bottom's in. There's absolutely a possibility that the bottom's in. But you do need to break structure. You do need to change the trend. You do need to change the character of the price, and that does take time. So I'm not jumping into any positions right now. A lot of people FOMOing in, thinking that they missed the bottom. I just don't see it. You didn't miss the bottom. If this is the bottom will be tested again, and probably tested again. That's one of the key things to hold on to when looking at these Wyckoff accumulations. We're in phase A. You shouldn't be making very highly convicted decisions when you're in phase A of any consolidation. Period. End of story. Doesn't matter what you're looking at. Crypto, equities, Forex, although Forex is a little bit of a different market. Commodities, it doesn't matter what you're looking at. You should not be making, very serious position bets in phase A or phase B. You want to let these events take place. You want to let these Wyckoff phases and these Wyckoff events, give them some time to develop. And that's when you're going to take your more heavy and convicted positions. If you're an accumulator, if you're a DCA, if your strategy is to DCA, in my opinion, you're at a fantastic level to DCA. Even if we do fall to lower levels, I still think that this is a fantastic level to DCA because, way off into the future of the next bull market, these levels are going to be considerably insignificant. You're really not going to care about a $20,000 Bitcoin. You're not going to care if you bought above 30 or 50, even $50,000 Bitcoin. I think the next bull market is when, Bitcoin's really going to, potentially get to, well over $100,000. That's all I'm going to say. And that will bring a lot of media coverage, and that will bring a unique cycle characteristic all in of its own. Now, we're below the 200 week, and this has never happened. This has never happened before in Bitcoin's history. So this is a big deal. Okay, let's go to the weekly chart. This is a big deal. This is absolutely noteworthy. Not only are we below it, but we're closing candles below it, and we're getting rejected from it. So it's showing a very clear sign that this cycle is different, and it is correlated with the performance of equities. So equities are having an effect on the typical behavior of Bitcoin and subsequently cryptocurrency as well. Now, when you're in a bull market, we don't close. We're always above the 21-week moving average in a bull market, and when we're below it, we remain below it. It's kind of that bull market, bear market thing. So, we're below the 21. So that's, it's not surprising we're in a bear market. And then when we get on top of it, we usually hold it as support for a bull market. But what's really interesting to me is in the past, we have never crossed, the 21 has never crossed below the 200. 21 has never crossed below the 200. We've come close, that it pretty much kisses the 200 to indicate that the bottom is in. So we came down, kissed the 200, rallied off of it. Came down, kissed it, rallied off of it. The trajectory here, we're not going to kiss it, we're going to cross it. The downwards momentum here on the 21 week, you cannot pump hard enough to make this cross not happen. So it's another measure of a different price cycle. It's another measure that the strength is not what it used to be. The strength is declining, and we're going to have a cycle that's going to have a lot of models break and a lot of differences in price here. So, this cross is unavoidable. We are going to have a bearish cross of the 21 week with the 200 week, which has never happened in Bitcoin's history, period. End of story. So not a great measure of strength, not a great measure of health. So concerning things to look at. Now, how do we avoid this? Well, the cross is inevitable, but what we do know is when price gets on top of the 21, it's typically a healthy move for a potential rally. So if price gets on top of the 21, the cross is going to happen. Let's just forget about that for a moment. If it gets on top of the 21, it's going to be above the 200, it's going to be above the 21, and there's a possibility for a rally beyond that point. But yeah, you know, this is noteworthy. We need to make sure that we're understanding that this cycle fundamentally, technically, is a different cycle. We're seeing things in a different light. We're seeing metrics that worked in the past no longer work. All right, now we're going to go back to Ethereum. So Ethereum here on the daily, we were trying to get above this support line, this now resistance line, sorry. Getting a little bit of rejection here. Let's take a look at the RSI. RSI rather confluent, nothing significant inside of the RSI. Let's take a look at alpha numerics. Alpha numerics did just get a bullish cross here on the daily, but we are curling over, so if we do get a rejection, that bullish cross will flip back into a bearish cross. Basically, I don't like how this is setting up, and if we fall below, let's say, this support line, so we do have some room. But if we fall below this level of around 16, we'll call it 1600. Let's just keep it clean. We'll call it 1600. If we break below 1600 in Ethereum, we're probably going to see sub 1000 Ethereum soon after that. Might not happen all at once, might not happen right away, but I think that we will kind of grind down in that direction until we're back at around $1,000 Ethereum, $900 Ethereum, maybe even an $800 Ethereum. Now, where it really becomes concerning, and you do need to have a plan for this, is if we break below 880. If we break below 880, even for a second, just a tiny millisecond with a wick, we're probably going to head, you know, begin to trend down to some much lower levels around 500. The merge, like we mentioned, it's not far away. It needs to be a rip-roaring success. It needs to be a huge success for that not to happen. And I'm going to err on the side of caution. I'm a little bit more pessimistic. I think that it's a very, very intricate, complicated transition that is going to cause a lot of arbitrage opportunities. And what comes with arbitrage opportunities is many, many unknowns. Retail doesn't understand arbitrage. You know, even developers don't fully understand the potentials of arbitrage. But if we have a proof of work chain, and we have a proof of work DeFi, and a proof of stake chain, and a proof of stake DeFi, who's going to sell what for what? Who's going to support proof of work? Who's going to support proof of stake? We're going to see a lot of people selling assets from one, whether it's proof of work and proof of stake, and moving those over to the chain that they prefer. We saw the same thing with Bitcoin Cash during the block size wars, and we're probably going to see the same thing again. So it's going to be a very interesting thing, and honestly, I just want it to be over and done with. I just want it to be done with. I don't support proof of stake personally for any chain. I think that's more of a predatory system, but if Ethereum is going to do it and the community is going to do it, that's the beautiful thing about decentralization. My opinion doesn't matter. It's whatever the people say it is, it is. If the people say that's ETH, that's ETH, and there's nothing I can do about that. So yeah, it's likely to happen. I just don't know what it's going to look like. All right, now let's get into the more traditional financial things. We'll start off with the S&P. So the S&P has been on a freaking tear, like gap up on a daily basis. 1, 2, 3 gap up days. I'm watching out for this level right here. You know, we encountered resistance here, and it all originated between these 2 points right here. So this is an interesting level. There's a lot of resistance here. We do have kind of an inverse head and shoulders formation. It's quite bullish. If we can break past that and consolidate on top, we actually have a really good setup here in traditional finance. If we see something like this, if we see us get on top of that level, consolidate a bit, the likely outcome would be a move up. I really like the structure that I'm seeing here on traditional finance. It's not quite nearly as it's not such a bullish picture on the crypto side of things, but on traditional finance, it's looking good. And you do have that trickle down effect of risk. So if we start seeing risk back on in equities, over time, it will be lagging, but you'll see risk back on in crypto. So then you'll see risk on with Bitcoin. That'll trickle down to Ethereum, and then that'll go down to altcoins and more degenerate plays. And we take a look at the NASDAQ, very similar as well. You know, you've got that inverse head and shoulders formation, which is showing a little bit of a macro trend change, not really macro, but it's showing a trend change. We have a bullish cross coming in on alphanumerics. The wave is green on alphanumerics. Volume is increasing here on the daily chart on the futures contracts for the NASDAQ. So that's looking good. What I want to see is I want to see us get on top of this level and break out this high. If we can break out this high, we're probably going to revisit around the $16,000 level, which again, you know, we're seeing potential for good follow through inside of the traditional financial markets, which will have the trickle down effects to crypto. And we can see that as well here on the dollar. The dollar is just kind of, you know, it's having its rallies and its reactions. Rally, reaction, rally, reaction, rally, reaction. We haven't broke structure. We haven't broke structure yet. Once we break structure, we're really going to see the floodgates of risk open. But as long as this trend can continue, as long as we will print higher highs and higher lows, we're not going to see risk on come to equities. We're not going to see risk on come to commodities. We're not going to see risk on come to cryptocurrencies. So we need to break structure. We have to break below and really change structure. If we can do that, we'll begin to consolidate. And while the dollar is consolidating and coming to a directional resolve, that will be the opportunity for stocks to rally. That will be the opportunity for crypto to rally. But as long as the dollar keeps printing higher highs and higher lows like it has been, it will continue to do so. So you really need to pay a lot of attention to the health of the dollar, because we want to see this crap out. We want to see this head down. If we can do that, fantastic. But as it stands right now, we've come down to the 50 level here on alphanumerics numerous times, bounced off the 50, rallied, bounced off the 50, rallied. We're not even at the 50 yet, so we'll have to see. If we start trading below the 50 and start to close some high time frame candles, let's say the weekly candles below the 50, then we've got a bearish case here for the dollar, which will put it into a consolidation pattern. The consolidation is good. It will help and allow crypto to catch back up. It will allow equities to go risk back on. So certainly, you know, something that we want to pay attention to. So to recap, Bitcoin looking like the area of rejection. Now, if the Ethereum merge is bullish, if the Ethereum merge goes well, I would not be surprised at all to see this level break and we could get a rally up to 30. Currently, I'm expecting a rejection here, and if the merge does not go well, we certainly will get a rejection from this level and at least test down at around 19,000. Ethereum getting a rejection from here, from this kind of support level. We tried to get on top of it. We fell back below. If we fall below this level at around 1600, we'll probably head back down and retest lower levels around 12. The dollar, we're all eyes on the dollar. We really need to break structure in the dollar if there's any bullish scenario that could possibly come. So if we do begin to break structure in the dollar, that will indicate to me that the indices have found a temporary bottom. So if the indices begin to rally off of this level, the NASDAQ breaking through the resistance here at 13,000, and the S&P breaking through this resistance here at around 450 on the Spider S&P 500 ETF, then, you know, we'll encounter resistance here and we can see what happens after that. But really, it all boils down to the dollar. If the dollar continues to rally, equities will not do well, crypto will not do well. But if we break structure here in the dollar and retest lower levels, now equities can catch up, now crypto can catch up. I do think, do you think we bottomed on the indices? It's too early to say. Personally, I don't believe so. I think that the fundamentals of money need an adjustment. That's the thing about funny money is, it can continue to be funny for a while. So I'm leaning more towards bear market rally, which would result in a macro lower high where we take out some of the lows, because inflation is still too high. I think that inflation needs to be tempered, and CPI data is coming in and we're getting 8% inflation and everybody's excited. 8% is still terrible. We're supposed to be at 2. So, if people are getting excited with 8% thinking that the bottom's in, I hate to break it to you, but more work needs to be done. We need to get the inflation back down to 2%. 2% is an appropriate level of inflation according to the Fed. And they're going to do what they can to make sure that that happens. It might take small adjustments over a 1-year period, maybe a 2-year period, or they might really strike hard and try to attack it with more than a few basis points. I don't think that that's going to be the case unless their attempts to fight inflation ends up still running away with inflation and we do begin to creep higher. Then they'll need to step in with a heavier hand. But as it stands right now, they're being very shy. They're being very shy with the rate hikes, and we're still at 8% inflation, which is too high. It's too high. We're 4 times what we need to be. So I do think it would be a bear market rally. That is all the time I have for today. Thank you all for joining in. You guys are savages. If you are watching the replay, I want to invite you to hit the like button. It does help out. I know we're in a bear market, but I'm sure somebody wants to see this shit. So hit the like button. Don't forget to subscribe and click the notification bell so that you can be notified of all the new drops. And if you want to be live in the action, follow me on Twitch. Twitch is where we answer the questions, where you can get the Q&A and you can get your most pressing questions answered. Chat was a little quiet today, but very characteristic of a bear market, so don't worry about it. Thank you all for joining in, and please trade safe. It is a jungle out there. Peace.